oats and spring wheat in Canada. There's talk that El Nino may turn into La Nina, which brings the possibility of drought to the Midwest. Of course, the people in Arkansas and Oklahoma may not think so, but at this particular point, those are factors that are driving the oat market. Now, if the oat market is a leading indicator, does that suggest that the price for corn is now potentially going to move also to the upside, kind of to the surprise of almost everyone? To show you that, though, sometimes you can't always count on this kind of thing occurring. Let's take a look at what has happened in gold. As you know, gold hit like a double top here. It has kind of reacted back and forth. It usually, in normal terms, would react, a little bit counter to what is happening in the U.S. dollar. But if you'll notice in the last few days that after this top, both of them had kind of little, not exactly doji, but candle tops that would suggest potential downturns. And unusual, the gold turned down for several days, and the U.S. dollar turned down for several days. So I guess this kind of belies the fact that you can have a situation where the markets that are correlated have been correlated all along. You now maybe have a different set of dynamics going on. Today, that normal relationship, gold up, dollar down, or vice versa, was resumed. But you just don't really know sometimes when those things are going to occur, and you have to be prepared for it. And that's why you have to keep track of the individual indicators on the charts as to what potentially is going to happen. Just kind of as a little review, we want to kind of take a look at some of the things we're looking at when we make a trading decision, when we're going to be using our indicators and the types of things that we're going to be looking at. I want to talk a little bit about, just as in our review, exactly exactly what are the forces that are weighing on the market. Fundamentals will rule eventually. Ultimately, they will rule. When you look at the current forces driving prices, you will see that sometimes they may seem to overweigh it, but that's a lot of news events. It's very difficult to interpret and make decisions on the basis of that. You'll have a lot of these little Lilliputians that are working on markets. When they cumulatively come together, they can affect prices and weigh down prices, control prices for a certain amount of time. But how long is that going to hold? The only way you'll know that is to see how those forces show up on charts. What's going to happen on the chart. Then you need to find some reliable indicators that will be able to detect whether there are some shifts in price, shifts in momentum that could drive the price into a new direction. And then when you do see those indicators suggest some kind of a price shift, then you have to be able to act on the probabilities, not the certainties, not the guarantees, but on some probabilities that are presented by those indicators to get into a position. Again, and always keeping in mind, you want to set some risk parameters and to keep your risk under control to a set amount of your account. As I said, I use 2 or 3%. I use 5%. Depends on you, what your risk tolerance is. But you definitely want to have some kind of risk parameters, some risk be part of your trading strategy. Now, if there are any questions, I see I have a couple of questions here. The one question says, for the Dow, I selected 200 points. How many for the E-minis? For the E-minis, whatever comes out in the E-minis, I guess it would be 10 points because of the $50 per point limit there. That'd be $500. I use that because that's kind of the percent of my account that I'm going to allow for my maximum size loss that I want to take, if all else fails and the market goes against me. So whatever, your account could be different. You also, instead of just saying, well, $500, you could say, well, instead of that, instead of one contract, $500, I might be able to trade multiple contracts. I might be able to take 3 contracts. But whatever the total of that is, you want to keep that within the risk confines that you have. Like if you had a $100,000 contract and you said you were going to risk 3%, okay, you're going to risk $3,000. You could trade 3 contracts, $1,000 each, and you can adjust your stops accordingly. So that will depend upon the size of account and how risk tolerant you are. Also, one other question, it says here, are you always in the market to either the upside or the down? No. I prefer, sometimes, that's the way it occurs because you have that big candle that suggests first a get out signal and then another that suggests a get in signal. Generally, when I try to look at it, it's hard to make two decisions, to shift from long to short, short to long, all at one time. So you try to do one trade at a time, and sometimes the candles come together. That's the way it works. Sometimes they don't. Sometimes, again, when we looked at these charts, and we were looking at them in hindsight, so you can say, well, that was a smart move. That may not be quite so clear when you're looking at the hard right edge of the chart, and that market's going down. Normally, stop to get out, take your profit or whatever it is, take care of the risk. That's one trade, and then you kind of need a little time to digest that before you get into the next trade. So it's a good question, as the stop and reverse type method that some people use, but I would be inclined to not use it unless, as I said, I saw a situation where you can get out on one signal and then that same signal the market moves down during the day, and if you're watching it during the day, to reverse and go the other direction. Are there any other questions? Well, if there are no other questions, I can just show you here on the screen. You have the information. If you are interested in more about Vantage Point, you can call that number. You can contact them there with that click here number. But if you have any questions about any of the strategy types of things, I encourage you to, you can let us know sometimes if there's things that you would like to see cover. We have a number of webinars, as Darrell mentioned earlier, that are in the archives. We have a number of webinars that are scheduled over the next few months. So we'd just like to get some feedback back if you have any, and, we want to be able to address what you might have. So if there are no other questions, I thank you for attending to today's webinar. Look forward to seeing you at future webinars. And we'll turn it back over to Darla.
Thank you, Darrell. We hope that everyone has learned something of value from this educational webcast today. The recording for this webcast will be posted on TraderPlanet later this afternoon, and we've made arrangements to email the link to everyone who is registered for this event. If you are researching trading software and are interested in seeking further information on the product that Darrell has featured in this presentation, just select the Click Here link on the final slide. This will place a request with our friends at Market Technologies for free market forecasts and additional information on the Vantage Point intermarket analysis software. This concludes today's presentation. Thank you for attending, and all of us here at Trader Planet wish you a pleasant evening.